Good morning and welcome to another episode of Crypto Daily. Today we're diving into the world of Layer 1 blockchains as HyperLiquid makes a significant announcement that's got the market buzzing. We'll also explore the broader implications of this news and its potential impact on the crypto landscape.
That's right, HyperLiquid's native staking is now live and it's already generating a lot of excitement. For those who may not be familiar, native staking allows users to lock up their tokens to secure the network and earn rewards in the process.
And what's interesting here is that HyperLiquid has given users a fair amount of choice, with 16 validators to select from. This should help to promote a more decentralized network and prevent any single entity from dominating the validation process.
Exactly, and it's worth noting that users can stake their locked tokens, but the accrued rewards will remain locked. This is likely a measure to prevent a sudden influx of tokens onto the market and maintain some level of stability.
Now, let's talk about the elephant in the room, the Hype token's incredible rally. With the market cap of $9.2 billion, it's pushed its way into the top 20 tokens, overtaking some big names like Bitcoin Cash, Litecoin, and even Pepe.
Yeah, that's a remarkable achievement, and it's not hard to see why investors are getting behind Hype. With the launch of native staking, the token's utility has increased significantly, making it a more attractive proposition for those looking to get involved in the HyperLiquid ecosystem.
This news also raises questions about the future of Layer 1 blockchains and their role in the crypto space. As we've seen with the rise of decentralized derivatives exchanges, there's a growing demand for more sophisticated and decentralized financial tools.
Absolutely, and with HyperLiquid's native staking now live, it'll be interesting to see how other Layer 1 blockchains respond. Will we see a wave of similar announcements in the coming weeks and months, or will HyperLiquid maintain its first-mover advantage?
These are all questions we'll be exploring in more depth throughout today's episode. We'll also be taking a closer look at the broader market trends and what they might mean for investors. So stay tuned, it's going to be a fascinating conversation.
So we were just discussing the growing institutional investment in the crypto space, and now we've got another big player making headlines. MicroStrategy, the company that's been aggressively accumulating Bitcoin, has made yet another significant purchase.
That's right. For the 8th consecutive week, MicroStrategy has added to its stash, buying an additional 20 at 136 BTC. This takes their total holdings to a whopping 4.6400 BTC.
Building on what we discussed earlier about the growing confidence in the crypto market, this move by MicroStrategy is a clear indication that institutions are still bullish on Bitcoin. And it's worth noting that this purchase was funded through share sales under the company's ATM program.
Exactly. And what's interesting here is that MicroStrategy is using a very specific strategy to fund these purchases. By selling shares through their ATM program, they're able to raise capital without having to go through a traditional secondary offering. This allows them to be more agile and take advantage of market opportunities as they arise.
Speaking of market opportunities, it's worth noting that MicroStrategy's CEO, Michael Saylor, has been a vocal advocate for Bitcoin as a store of value. And with the company's continued accumulation of BTC, it's clear that they're putting their money where their mouth is.
Absolutely. And it's not just MicroStrategy that's making big bets on Bitcoin. We've seen a number of other institutions, including pension funds and endowments, start to dip their toes into the crypto space. This is a trend that's likely to continue, especially as the infrastructure and regulatory environment around crypto continue to mature.
That's a great point. And as we discussed earlier, the growth of institutional investment in crypto is likely to have a major impact on the market as a whole. With more and more big players entering the space, we can expect to see increased liquidity, more robust infrastructure, and potentially even higher prices.
Exactly. And it's worth noting that MicroStrategy's continued accumulation of Bitcoin is likely to have a positive impact on the market, at least in the short term. As more and more institutions follow their lead, we could see a significant increase in demand for BTC, which could drive prices higher.
Well, we'll certainly be keeping an eye on MicroStrategy's next moves, as well as the broader trend of institutional investment in crypto. It's shaping up to be a very interesting year for the space. That's for sure.
We were just discussing the unpredictable nature of crypto trends and how quickly they can shift. And I think a great example of that is the tap-to-earn gaming phenomenon that took Telegram by storm at the start of 2024.
Yeah, absolutely. I mean, who would have predicted that something as simple as tapping a coin within a messaging app would become a full-fledged mini industry? Notcoin, the first of its kind, was like a curiosity, an enigma, and it seemed to come out of nowhere.
Right. And by the end of the year, Notcoin's success had spawned a slew of similar games, drawing in substantial demand and creating a buzz around Telegram gaming. But just as quickly as it rose to fame, it seems to have imploded.
Yeah, it's crazy to think about how short-lived it was. I mean, when Notcoin launched in January, we were all scratching our heads trying to figure out what the appeal was. But as the months went by, it became clear that people were hooked on the simplicity and potential rewards of these tap-to-earn games.
And it wasn't just the games themselves, but the community that formed around them. People were sharing tips and strategies, and it became a social phenomenon within Telegram. But now, it feels like the hype has died down and the moment has passed.
Building on what we discussed earlier about the fleeting nature of crypto trends, it's clear that Telegram gaming was just another example of how quickly the market can shift. 1 minute, everyone's talking about it, and the next, it's old news.
Speaking of which, I think it's interesting to consider what factors contributed to the rise and fall of Telegram gaming. Was it just a fad, or were there underlying issues that led to its demise?
Well, one thing that comes to mind is the lack of sustainability in the model. I mean, how long can people keep tapping on a coin before they get bored or realize it's not worth their time? It's a classic case of hype over substance.
That's a great point. And it's also worth noting that the crypto space is constantly evolving and new trends are emerging all the time. Maybe Telegram gaming was just a stepping stone for something bigger and better.
Exactly, and who knows, maybe we'll see a resurgence of tap-to-earn games in some form or another, but for now it's clear that the Telegram gaming phenomenon has run its course.
So as we were discussing earlier, the current market trends have everyone looking for signals of a potential Bitcoin cycle bottom. I think we might have found one in the looming U.S. debt ceiling.
That's right. Treasury Secretary Janet Yellen recently announced that she expects the debt ceiling limit to be reached between January 14th and January 23rd. What's interesting is that this coincides with the inauguration of President-elect Donald Trump on January 20th.
Exactly. And historically speaking, raising the U.S. debt ceiling has been bearish for Bitcoin. But some analysts think that this could be a contrarian indicator signaling a bottom for the current cycle.
Building on what we discussed earlier about investor sentiment, it's possible that the market has already priced in the debt ceiling news. If that's the case, then we could see a reversal in the trend once the ceiling is actually raised.
That's a good point. And it's also worth noting that the debt ceiling has become a bit of a political football in recent years. With the inauguration of President-elect Trump, there's likely to be even more attention focused on the issue.
Speaking of politics, have you seen the latest comments from the Fed about the potential for a digital dollar? It seems like they're getting more serious about exploring the idea.
Yes, I have. And I think it's interesting that this is coming up at the same time as the debt ceiling debate. It's almost as if the Fed is trying to position itself for a potential shift in the global monetary landscape.
That's a great point, and it's also worth noting that a digital dollar could potentially have a big impact on the crypto market. If the Fed were to issue a digital currency, it could potentially compete with Bitcoin and other cryptocurrencies for market share.
Exactly. But at the same time, it's also possible that a digital dollar could help to legitimize cryptocurrencies in the eyes of mainstream investors. Either way, it's going to be interesting to watch how this plays out in the coming months.
Absolutely, and we'll be keeping a close eye on developments as they happen. In the meantime, it's worth keeping an eye on the debt ceiling debate and how it might impact the crypto market.
We discussed the recent uptick in DeFi hacks earlier in the show, but there's another type of scam making the rounds that has left us scratching our heads. Crypto scammers are now stealing from other crypto thieves.
I love the irony in this story. Essentially, these scammers are using sophisticated wallets to trick wannabe thieves who end up losing small amounts of tokens. It's a scam within a scam.
That's right. And what's interesting is that this hustle is likely targeting individuals who are trying to get in on the scamming action themselves rather than going after large sums of money. It's almost as if the scammers are saying, hey, if you want to play the game, you've got to pay the price.
I think this story highlights the cutthroat nature of the crypto space. We've seen countless examples of scams and hacks, but this one takes the cake. It's a reminder that in the world of crypto, it's every person for themselves.
Connecting back to our earlier discussion on DeFi hacks, it's clear that security is still a major concern in the crypto space. Whether it's a sophisticated scam like this one or a more traditional hack, there are plenty of ways for bad actors to exploit vulnerabilities.
That's right, and it's not just about the security of individual projects or exchanges. It's also about the mindset of the people operating in this space. We need to be more cautious and more aware of the potential risks involved.
So, what are the key takeaways from today's stories? For one, it's clear that the crypto space is still a wild west of sorts, with plenty of opportunities for scams and hacks. But we're also seeing a growing awareness of these issues and a push for greater security and regulation.
I think that's right. And looking ahead to the coming week, I expect we'll see more developments on the regulatory front, particularly in the US. The market is likely to remain volatile, but we're also seeing some promising signs of growth and adoption.
That's all for today's show. Thanks for tuning in, and we'll catch you tomorrow with more crypto news and analysis.
Don't forget to follow us on social media for the latest updates, and be sure to subscribe to our podcast for daily crypto news and insights. Until next time, stay safe and stay informed.